Good morning, it's Jonathan Barrett with the morning debrief. It's the 2nd of September, the current time is 7:41. Disappointing Dow, disappointing move on the Dow last night. We saw negative numbers last night. It all came down with obviously economic figures, and I think the ISM index came in at 50.9. That certainly remains a little bit weak. Construction spending was also down at 1.3, and confidence continues to come under pressure. We also had some negative manufacturing data in Europe as well. So I guess what we've got to focus on is, after we've had that euphoric rally after Ben's speech and all that, I think the market's starting to really focus on where we're at. We've had some good moves in the equity markets, so it's only right to see a little bit of adjustment occurring, and we all expect that volatility to continue. So I guess if anything here, we'll be focusing on the unemployment tonight. The market really wants to see what happens. Last month we had 117,000 plus non-farm payrolls. This month we're only looking for 68,000 to 75,000, and the unemployment rate to stay at 9.1. Now we want to see these numbers to be stable. We want to actually see some improvement. If we don't get that, then that confidence will continue to wane, and as a result of that, asset prices perhaps will come under pressure. And perhaps we're starting to see just a little bit of that, where we see confidence zap from the market and prices go lower. Let's just have a look at just a few things. Right, I guess the most important thing is just a general overview. Let's check what news is out there. Remember, 7th of September is something we're focusing on, and that's that High Court decision in Germany. So just remember that. Remember, jobs data is out tonight. Keep close to that, see what happens. Looking at just general US economy, US bonds were up. US dollar was also very strong, so keep an eye on that. Although we abandoned our view in Barrett's bulletin for a little while in wait of what was happening, the US dollar has held up remarkably well. We'll have a look at the chart of that just in a moment. Okay, US manufacturing grew in August, not as much as expected, which is a bit of a worry, and EU manufacturing shrinks more than forecast. That's something we all knew. Energy sector, we're getting a little bit more news that that because we get the funds released from the World Bank in terms of those funds frozen, then we should get some production happening there pretty soon. Also, Kati heads west. That's the platform, the hurricane, and obviously we're seeing a little bit of disturbance there. At the moment, the oil market, it's hurricanes versus economic recovery, and I think the economic recovery is the one that we've got our money on in terms of moving. But the oil market has been a little bit better bid as a result of that. Okay, let's just have a quick overview of the what's happening in the world. As I mentioned, the Dow was down 119, 1%, the S&P was down 1.19, and the Nasdaq was down 1.3. The top 50 was up 2, the FTSE was up 7, and the CAC was up 11. The DAX was down 68. Closest to home, our SPY was down 49 points at 2,560. As we can see, just all moving sideways at the moment. Probably a little bit more weak, I guess, depending on how that unemployment number comes out tonight. We can only wait and see. Okay, let's have a look at some of the commodities. You can see that on the dollar index chart, which we've put up here, that we're holding this ground, and you can see I'm just drawing there, that's support. And also there's a little bit of divergence. You might like that. I'll just put that up a little bit there. See here? Yeah, with price action here has done nothing, but the divergence here you can see. It's certainly suggesting that the risk is to the top side. Let's have a look at that little trend line there. A little bit of a break. That could be a little bit of fun for us. That certainly holds true to the view, but as we mentioned, we abandoned it in wake of the strength of Bernanke's comments, and the market assuming weaker dollars. But anyway, let's move on. That's dollar index. Let's look at some of the commodities. In particular, we'll look at, let's just look at another currency at the moment, dollar yen. Dollar yen, 76.89. As you can see, it just sits there down the bottom. Do expect some form of a lift soon, but not at the moment. Aussie differential helps it, 107.19. Last night it sort of certainly edged out a few gains. With commodity prices under pressure, probably expected to test back to this trend line. I keep an eye on that trend line there because the break of that sends it back down to lower, and we are mid-range, so I'd certainly see if that trend breaks, then I'd certainly buy some dollars. The euro, this is a tough one. The euro, I think, has been under a little bit of pressure, and when I look at the euro, probably expectations, I think, are that she can come a little lower, maybe even down to that 1.040. We are long dollars at the moment against the euro. That's short euro long dollars, and we're expecting obviously further declines on that. Okay, just having a look at the gold market, 1825, holding up well. There you can see that element of divergence, but gee, it would have been hard to trade. There's no doubt about it. Probably best to have a look at an hourly chart. And when you see that hourly chart there, you can see that this is a breach and pullback. So, you know, when you try and trade that sort of movement suggests that we should trade higher. And if it breaks that area, then you know where your stop is. It's important because as we are close or getting close to the top ends, that we could expect that gold market to push on. But if it doesn't, then you want to have a good exit level, an exit strategy. And that's why we sometimes always say that, if you're buying a break, always put the stop in the low of the day of the break. You can put one in under here if you do decide to buy that break. This is a breach and pullback. Ordinarily, that market should go higher from here, but always be protective there because you can see it's high, hit 1850 and then fail. So, so if you are doing that, look to place that stop. Have a look at the crude market now, 88.75. There's the hourly charts there. It looks a little bit overdone, as you can see there. Here, you've got those succession of stochastics moving, where we've been moving higher. So, just check it. A break through 87.70 sets us back on the skids. Price is lower. This whole movement here and here could be just a corrective phase of the first leg down from here. So that's something to keep an eye on. We do have a small short in crude at the moment. Okay, copper going sideways, obviously running out of steam due to confidence and lack of Chinese buying. Still within a range, just keep an eye there. And obviously we know where we're wrong through that 385 is probably the linchpin. You can probably move it up there a little bit to 395. But just be a little bit cautious on that. Having a quick look at some of the softs. I want to keep an eye on that soybeans at 1436. It's still looking right on those highs. Let's see if we get some form of lift there. But we'd like to see continuing to trade higher. But great little chart there, and would like to see it head to 1500 pretty soon, and maybe just fills this gap and comes back onto support. Let's see how that unfolds. Okay, major data out tonight, obviously, is the unemployment rate in America. There it is, unemployment, non-farm payrolls up 75, change in private roles, private payrolls up 105, manufacturing no change at all, unemployment rate sticks at 9.1%, so keep an eye on that one. So, but that's pretty much what the market will focus on today. Obviously the volatility is here. Let's see what happens, but remember we've still got that 7th of September announcement there from the High Court in Germany. So that's it from me. Happy trading. We'll talk to you later. Bye for now.